Good evening all and welcome to the Pension Committee meeting. Before I start, I just wanted to pay a special note of thanks, given obviously this is our final council meeting of the cycle, especially to Councillor Owen Pritchard, who I believe it is his final council meeting. Owen joined the committee 4 years ago and took over as chair. And I can say that sort of being on the committee for 2 terms, the second term, we really sort of made huge progress in terms of changing around the investment. So welcome back again after about 6 months out, but yeah, and thank you. I will start with agenda point 1, apologies for absence.
Chair, we have 2 absence, Caroline Holland and our staff representative Emma Price. They both are not here today. And Councillor Lakshmi is not here.
Thank you, Lakshmi, that's been noted. Point 2, declarations of pecuniary interest. Are there any? Nope, okay, moving quick. Point 3, the minutes of the previous meeting. That's on page 1 and 2. Are they approved? Approved. Right, so to allow Elizabeth to get back to her children, who I believe have unfortunately got COVID, I will push EY up the agenda to point 4. So I will hand over to Elizabeth, who will be giving a quick debrief of the final audit results for 2020 and 2021, and also the audit plan for 21 and 22. Over to you, Elizabeth.
Brilliant. Thank you, Chair. Yes, so for the 2021 audit results report, this is obviously casting your mind back to all of last year for the accounts for the pension fund. We gave obviously an unqualified audit report. There were some minor amendments made to the accounts, but everything was agreed and there were no unadjusted misstatements in the accounts. We would say that actually officers were really helpful in kind of working through all the amendments that were required and finding all the evidence that we needed. And we issued the report on the 4th of February 2022. For those who have got a dual role, you'll see the date of this report is October 2021, and the audit of the pension fund was completed in advance of the 30th of September. That audit was completed earlier, and it was the council's accounts that took us longer to audit and to finalise some of the complex judgment areas of those accounts, and that's why your audit opinion was signed in February 2022. So there's no particular delivery issues with the pension fund, but it was really just a flag. And then I was just going to take the report as read and not take everyone through it unless people wanted me to and had any questions.
That's okay. Elizabeth, yeah, so the audit plan, please.
Thank you. Yes, and this one is an outline audit plan. For those, I don't know if anyone's seen this before, I know it's kind of a new thing that we're bringing to the Pensions Committee. We always do a full audit plan, which is usually around 25 to 30 page document, but under the International Standards of Auditing, which obviously I and my team audit by, we have to have completed some of our planning work to do so, and that work is not planned until the end of April, early May. So at this stage, we've brought an outline audit plan just to update members of this committee with what the risks are rolled forward from the 2021 audit. We've not deemed to change any of those as it currently stands. One of the things that we will be looking at, and we have done elsewhere, is actually looking at your valuation of your private debt and the infrastructure investments, your level 3 debt and investments, looking at whether they're significant risk. And for those just in the auditing terminology, we have things called kind of either a fraud or a significant risk, and then those that are inherent risks. An inherent risk requires to do an enhanced level of procedures from just a normal testing of any account balance, but where they're either a significant or a fraud risk, those international standards on auditing do require us to do further enhanced procedures and use experts in order to actually be able to audit those figures in your accounts. So I'm just going to currently look at what the year-end accounts look like, and then when we bring the full detailed audit plan to you, that risk may change its focus and move to a significant risk, really, when they're material and obviously they're hard to at value investments, and therefore I do need specialist advice. I'm not going to pretend to be a valuation expert in your investments, and therefore I do need experts to help me, and therefore that would increase the risk to significant. But that's just to say as a flag that might change for your full detailed report, but currently is still sat as inherent as in last year. And then the materiality levels are just calculated on your audited 2021 accounts, and again when we get the draft 21-22 financial statements, we'll update that materiality and update you as well to say what levels that we're actually auditing by, and therefore the assurance I'm giving you as a pensions committee on it. And then the other element that's included in this outline audit plan is just the proposed fee, and that's just to say that we've determined at EY that actually we need increased audit fees. We have many a debate with Caroline and Roger on this topic, and I'm sure we will continue to do so. And that's just to say that we've set out our planned fee for 21-22. It doesn't necessarily mean that public sector audit appointments who regulate kind of our industry, and if we can't agree it directly with the council, it then goes through them to arbitrate on our behalf and on the council's behalf. And the final fee you'll notice on page 10 of my report says that actually of the fee we requested for 19-20 year, which is the last year they've determined, it's lower than we requested. But I've just increased, for those who've read the report, just to say I've asked for a larger fee. We'll ask PSAA again, and obviously that will have to go through a process. And really then, if there are any questions on anything that's in that report.
Question, Mashi.
Thank you, Chair. It's like last time we had the ISA 540 that made us do some last minute panic and do exam. So will it be again a big part of the audit, the ISA 540? And are there any more regulation requirement we have to meet, or at this stage nothing?
No, the good news to a certain extent is that because we've already worked through the ISA 540, the additional requirements that were required very late in the day for all councils to do through their pension funds, because we've already done that additional work, that's now built into the audit programme. So the bad news is that it will be recurring work every year that we do, but it won't come out in mid-September and derail what could be a potentially end of September sign-in date.
Thank you. I've actually got a few questions myself, Elizabeth. So on page 72, so we can see for 21-22, we've got to be confirmed for the going concern, which is sort of ISA 570, PBSC assessments, and also the ISA 19 work. Is there a reason why we haven't been able to sort of confirm or have an indication of that level of fee as of yet? I'll also pick up my other two questions at the same time. The second question is around, given obviously the financial year is ending on the 31st of March 2022 now, what work or what extra work are EY going to be doing over seeing whether the council's investment managers or the council are taking in terms of ensuring that we are sticking to our laws and regulations around not having exposure to Russian assets? Because obviously, I mean, I would probably think that the materiality level that there isn't really one, because obviously it's laws and regulation. And just finally, which it could be an incorrect point, ISA 315, does that impact the work that's going to be happening in the council going forward in terms of as the controls around the council's investment managers?
So taking those in turn, the fee is to be confirmed on two of those areas, and we could have put in a range for the areas, but at this stage, because we haven't undertaken any work on the 21-22 accounts, I'm not sure of what that work level will be. It depending on kind of your going concern, if anything changes, which is unlikely to in the next week, but you never know. If something changes and therefore we have to do much more enhanced audit procedures, if a council or pension fund has particular money kind of concerns or cash flow issues, obviously, which it wouldn't be at the pension fund, but it's more so on the council side, then we obviously have to use consultations, and we do my technical team and our professional practice team, and that then obviously gets an enhanced audit cost. So I can put in for the next version of the full audit plan, if that would be preferred by members, to include a range, so like the 2,000 to 6,000 for the going concern and PBSE assessment. That's a realistic range of what it would sit in, and just depends then on the level amount of work that we had to do above and beyond that as to then be that additional fee. So I can do that if members would like. On the Investment Managers Council, the laws and regulations point, yes, we will be looking at the Russian exposure that you have. That will be part of what obviously is your held at year end. And if you have any Russian investments within your pension fund, and I know there are some through the London Civ, obviously the valuation of those is obviously the key risk that we'll be looking at. So if you hold a certain value of investment, if you keep them at that value, that then we'll obviously be looking at what you've done to assess whether that value is correct based on kind of the Russian banks being closed. Obviously, by the time we actually come to sign the audit opinion, which will be end of October, early November, then obviously the world potentially could have changed quite a lot within that period. And therefore that'll be one of those things that we'll keep up to date to ensure that year-end valuation, and that there aren't any post-balance sheet events that need to have occurred in relation to any investments held. On ISA 315, yes, we do look at the control environment. It's kind of wider than looking at individual elements of it. So it depends on the controls that you've got in place. So kind of where you've obviously got your fund managers reporting to you tonight, and obviously the meetings that they have with officers and management to ensure that the pension fund is running as kind of the council and pension fund requires. We ensure that all those are in place and that you are getting regular updates, regular reporting like you have tonight. If we weren't seeing that happening, then yes, that would be a control weakness, and we would identify that. And again, I suppose it's that you're using a reputable firm and someone that we've heard of from an EY perspective, or if you were kind of ditched like a well-reputed firm and kind of chose someone very local to you, and that you suddenly got their advice, then we'd be questioning that. So that's hopefully answered your queries.
Thank you, Elizabeth. Any other questions? No. Well, thank you, Elizabeth. Yeah, no. So on point one, yeah, if we could get that, the range, and echoing Councillor McCabe's views on standards and general purpose.
Yep.
If we can try and sort of keep the cost down, we would appreciate that.
Noted.
Thank you.
Thank you ever so much, and apologies for dipping off. I do appreciate it. Thanks ever.
Thank you. Right, so we're now on to agenda item 5, which is the quarterly fund performance from October to December 21. So I believe we'll start off with Roger. So I'll pass over to you now, Roger.
And thank you, Chair, and good evening, everybody. Just briefly, you've got the report in front of you. Just briefly for the public part of the report. Members will note that during the 3 months up to the end of December, the fund increased by just under £30 million. Although we do acknowledge that since then, of course, there's been some turbulence internationally because of Russia's actions in Ukraine, etc. And so we would expect the values to be somewhat changed from this. But obviously, we've got a few more days to go, and although the markets are picking up, we will be interesting to see what the value is at the end of the financial year. But during the 3 months to December, the fund did increase. During that 3-month period, fund assets returned some 3.4% against a benchmark of 4.2%. So they did underperform against the benchmark of 0.8%. So it was fairly close. Interestingly, over the last 12 months, the fund has returned 11%. And importantly, for the last 3 years, bearing in mind we have a triennial valuation following the end of this financial year, the fund has returned an annualized return of 13.9%, just under 14%, against an actuarial assumption of some 4.8%. So that will be important for the triennial evaluation, which our actuaries will be undertaking at the close of the financial year. Members will also recall that the fund has benefited in the past from being overweight in equities, and that was simply because we were waiting for a number of underweight mandates to be drawn down. Those underweight mandates were in property, private credit, infrastructure, and multi-asset credit. And while we're waiting for that money to be drawn down, which a large proportion of it is still waiting to be drawn down, we're overweight in equities, and we benefited as a fund from that. But members will also recall that last meeting we took an action to divest ourselves of that equity overweight, which was some 130 odd million. And I'm pleased to report to members that we made that change and moved out of equities in good time for what was a reduction in the equity market, given the results of the international events that I outlined earlier. So we did avoid quite a significant drop in our fund value by acting as prudently as we did then in reducing our equity exposure. So I think that's all I'm going to say for the purposes of the public element of the meeting, Chair. Happy to take any questions on that outline.
Any questions?
I have a comment to make, not a question. Yeah, just adding to Roger's one, yes, we came out of the equity as part of rebalancing, and we parked the 100 million in the diversified growth fund, which able to reasonably stably perform even when the market came down. So that was a good place to, it was Hyman's decision to take out the money in the last quarter of 2021. And I just want to draw your attention to page 6, because we are fast approaching for the next valuation. Last valuation cycle, March 2019, we had about 721 million. And we, as of December, we are 963. So we can be confident we will be in a good position at this March valuation, even after this turbulence in the current market.
Thank you, Meshi. Hyman, do you want to say anything now, or?
So apologies, Chair. Nothing to add at this point, and I'll save some comments for the private part of the meeting, if I may.
Thank you. Okay, so thank you, Roger. We're now on to agenda item 6, and we have an update by the Pension Shared Service at Merton Pension Administration. So this is quite an important bit. So this is looking at the administration side, so the membership, the pensioners, the day-to-day running of the scheme, rather than the investment side. So this is a tutorial in a way. So we have a guest speaker today, Martin Doyle from Wandsworth. So welcome and thank you for coming out tonight. So I will pass you over first of all to Nimeshi, and then Shay will pass over to Martin. Thank you.
Thank you, Chair. So as the Chair mentioned, and we are approaching the valuation, how much the investment is important to secure a good funding level. The administration side, member side is also equally important, because we can have a good investment return, but if a membership data is not up to date or is not correct, it can really impact the valuation and the contribution council and the other employees paying. So it's that much important. That's the reason we want the committee to look at the administration side at this committee meeting. And I'm not going to go into detail because Martin will show the detail, but as for Merton, Wandsworth is managing the administration services for Merton as well as other 5 other councils. And now I'll hand over to Martin to talk in detail.
Thank you, Chair. Thank you, Nima. So this is for the talk that these slides that were prepared. Okay. Thank you, Chair. So just to introduce, I think it's my first time at the committee, so just to introduce what we're doing. We're a shared service, 5 London boroughs, Camden, Merton, Richmond, Waltham Forest and Wandsworth. And we also have a relationship with Bromley Council to do some oversight responsibilities for Bromley Council. So overall, there's 28,000 active members and about 230 employers that we're overseeing, and 70 payroll providers. So we have joined together as a partnership all those councils to get that resilience, strength and depth to face the upcoming challenges. In terms of what we do, we are focused on the administration of the pension for our LGPS members. Administration would mean getting the record set up for new starters, opt-outs, retirements, transfers, deaths, survivors. The council also has an external ABC, additional voluntary contribution arrangement to oversee. And we have, as well as keeping those records up to date, we contact members by law. We have to contact them each year for their annual benefit statements. So we maintain the policies across the boroughs. Although we're a national scheme, there is a lot of local discretion. So we have a LGPS discretions policy for each fund. And so we coordinate keeping that in line with any changes in legislation. We also have communications policies, and since 2020, we've had a pensions administration strategy, which helps our relationship with our scheme employers. We have about 31 employers in the Merton Fund, and with about 17 of those have active members. So, of course, the London Borough of Merton is our main employer, but we have the others as well to connect with and form relationships with. So that's an ongoing process with forums and reaching out to the employers. And we have our online presence. So we have a dedicated website for all our members to go and find out information. And we've launched the member self-service portal for members, which we'll look at in a moment. In terms of what we see as the challenges, just looking at on the slides, we looked at the over the last few years, what's happened to the LG and what is happening to the LGPS since 2012. What happened in 2012? It was auto enrollment. The government made mandatory workplace pensions, and so that's drawn in a lot of members over the years to our pension scheme. So it has changed since 2012, when we had about 4.6 million members nationwide. Now it's over 6 million members. So a big increase over those years, and a change to the dynamics as well. We used to have fairly even ratio of actives, deferred members, and those retirees, but now it's skewed towards the deferreds, people coming in and out of the scheme in a short space of time, and obviously means more calculations in a shorter period. People who wouldn't previously have joined the pension scheme are being drawn in by auto enrollment, and it just means the membership is continuing to increase. And that's the same with scheme employers. It's doubled in size. And the challenge for having a lot more employers, often they're smaller employers, and there's that kind of single person risk for the LGPS when you have smaller employers. There's only probably one person in the organisation who knows about the LGPS, and if they leave or go on sickness, there's a gap, and that's a risk for members. So it just means more engagement to keep them fulfilling their duties. So in the slides we've shown that the change in Merton membership over the last five years, and the biggest increases we were saying is in that deferred category. The leavers is the biggest increase, but over the last 5 years, a significant increase in Merton members. And so the challenge is not only for Merton, but for all LGPS funds, is all the complexities of the legislation, all the changes. We moved from a final salary scheme back before 2014. And as with all the big public sector pension schemes, we've now all moved into care. But it wasn't a simple transition. There were a lot of transitional protections and underpins that meant that all those earliest schemes are still part of the current scheme. And we know about McLeod, which centered on the issues around that. But there are complexities to running two different schemes. If somebody has earlier membership in one final salary scheme, then moves into a care scheme, there's a lot more complexity, difficulty in making a member, giving the member enough information to make informed choices. Just a quick example of somebody who, if they transferred benefits in the LGPS, around the LGPS, when we were a final salary scheme, it was a relatively simple choice for a member. If their pay was higher in their new post, they generally could move and get more benefits from moving into a new post. But when this mix of final salary and care, there's a lot more decisions. There's a final salary link, pay link. And so instead of one decision, there's probably 8 different scenarios that they have to think about whether it's a good idea to transfer. So it's moved from a simple conversation to a lot more complexity and a lot more information that has to be given. We've also got more governance and regulatory oversight. We know that we've got the Good Governance Project. We'll have consultations in the summer, more demands in the new code from the regulator we expect in the summer, as well as more McLeod regulations. So all of that has to be understood by the staff and then explained to members. So obviously recruitment and retention, it takes longer to train staff, so keeping hold of those staff is more becomes more needed. And in general, now we know that 50% of all crime, according to the ONS, is now financial online, including online crime, and the cyber risk is a big challenge moving forward. And what happens if we weren't to get it right? Well, the dangers of if we don't get the information, if for example, if there was a cyber attack and attacks to our IT, then it's a danger that we miss data, we get the data wrong, backlogs, and reputational risk. So our data has to be protected, it has to be clean. So it's a combination of getting that clean data from employers and then getting it onto the system and then protecting it on the system. So what we're doing to meet the challenge is introducing more, we're rebalancing to get cleaner data onto our system. So we've got a system called iConnect, which is an automated system of taking information from employers directly from their payrolls onto the pension administration system. It prevents that manual handling of transposing figures. So hopefully that will always mean that there's cleaner data on the system. And we've got our new member portal, our member self-service portal, where it's very visible that people can see what their benefits are, and it follows the government's desire to have that pensions dashboard, that freely available, visible information for members. And we're moving to more automation in terms of bulk process of leavers, online retirements. And it's important for us also to keep under review our staffing levels and making sure that we've got enough cover to meet all the emerging challenges from the administration. And finally, just on the member self-service, we're out of all our group of partner councils, we're pleased that Merton Council has the highest uptake of member self-service for its LGPS members, and they certainly will see the benefit of that because they can see in real time the growth of their benefits. They can make changes to their nomination of who they'd like any death grant lump sum to be paid to. And they can do their own forecasting for retirement, and it's a secure way of keeping annual benefit statements for them. So we see that as a great development for the members.
Thank you. Could I start by asking a few questions? And Jose, thank you for your presentation. Being obviously a member of the committee for 8 years, I think is the first time that we've had a session like this, so it's quite helpful is to sort of understand as the backing operation side of it. My question is, in terms of the team that is looking after the 5 councils, etc., I mean, like, how big is that team? And secondly, around control environments, is that sort of like done in-house, or do you guys have, for example, an AF report where the controls of the operations are sort of someone comes in and effectively audits it?
Yes, so the team is 34 staff in the establishment to cover all our boroughs. In terms of oversight, yes, we have a shared audit for our pension administration. We have a yearly audit of all our activities are audited, and the report is published, and we take it to the board as well. So yes, in terms of oversight, we have that, and that also includes cyber risk. That's something that we look at as part of the audit. We have a host authority, Wandsworth, and so when we look at risk, we have asked them to produce the evidence that they have a satisfactory security standards, the ISO standards, to have that kind of IT hygiene at source. And our data is hosted by our pension software company, Haywoods. So all our pensions data is held in their storage facility, all our member records. And so we have assurances on their pen testing, potential hacking of information. They give us reports on that, as well as their disaster recovery plan, how quickly we can get the overnight file back into live. So they've given us assurances on that as well.
And obviously, I mean, you obviously spoke about saying that the members within Merton's uptake is better. So just obviously for my own educational, so if, for example, a deferred member is hitting to retirement age, what sort of communication does your organization sort of provide? So, I mean, how would a member, or take it even a pensioner that is an elderly member, and then say a dependent or a surviving spouse is to sort of take on their pension? I mean, how does the communication work in terms of keeping them involved? Because I know there are quite a number of pension schemes, I mean, private pension schemes, where they are sort of sending out quarterly newsletters, this is what's happening, and etc. They've obviously got forms just to go around for pensioner existence checks. So how does your organization, in terms of the communication element, work?
In terms of, it is slightly different for active employees and for members who've left. But in general, once they reach age 60, we write to them and just make them aware that they've passed a milestone. It's not the earliest date that they can voluntarily retire, but it's a significant date for most people age 60. So we write to them and invite them to claim if they want to claim at that point, and they can leave their benefits in up to age 75. But we do give them a kind of wake-up letter and ask them to apply if they want to. There is a difference in terms of active members of staff who, I think according to the ONS, only 1% of active employees in the population don't use the internet. So it's quite easy to contact them, whether it's through the intranet or staff emails or through MSS. In terms of retired, the older non-actives, the ONS says that figure of non-use of internet goes up to about 20%. It can get quite higher the older you get. So principally for our older members, for annual life certificates, for example, it's still done by post. Older members still prefer post and writing to us, and often either emailing or actually sending a letter for a change of address. So we're not going to change that relationship. If our customers feel comfortable using post, we'll continue to do that. But I think as we come through for the active workforce, that they are more used to email and the portal, and so it's with those active members, it's up to, in the first year of rolling up, we're up to about 60% of our active members are logging into their portal, and that's rising all the time.
Thank you, Martin. Any questions, Meshi?
Not a question. I have a couple of points to make. Thank you, Martin. And apologies, I didn't bring this update before. You said you didn't hear it in the last 8 years. Couple of points to make. Martin, regular attendant at the pension board. Pension board is main responsibility to look after how administration is working. So they review every quarter. And if the committee is interested, pension shared service, they do share a quarterly performance on how many transfer in, how many pensioners were proper processed, what is the debt, what is the KPI, and how did they meet the KPI, any complaints. So I'm happy to circulate that every quarter because I receive goes to the board. I'm happy to circulate so you'll have a better understanding of that one. On the communications, like ask about the pensioners and everything. One is the member self-service, which is an online update. If they have access, everybody can go and see it. For the active members, last summer we had an open day, virtual open day, and we gave them 1.5 hour session. We organized 4 sessions. They were able to join. I was giving an update on the investment, and Martin and team was talking about the administration, where they can contact, what they need to keep updated on the pension side. And so it's like I'm giving them access who to contact if they need or something. So we're planning to do that annually. And also on the employer side, because the valuation is coming, like last valuation, we will be keeping an open day for the employers. Mainly we have academies and a couple of other organizations who is part of our Merton pension fund. So we will invite them, give their individual triannual valuation results, and we always have the actuary answer the question. So that's what yeah, that's what I wanted to say.
Thank you for that update, Nimesh. Yes, and in terms of circulating that membership data, that would be great, actually. Any other questions? Thank you, Martin. You're very welcome, and we'll hopefully see you again soon. Thank you. Right, so on to agenda item 7, future meeting dates. Are they noted? Yeah. Brilliant, thank you. And point 8, any other business? Nope. Okay, no, any other business. Right, so we're now on to item 9, exclusion of the public. So I think okay, yeah, yes. So for point 9, so to resolve that the public are excluded from the meeting during consideration of the following reports on the grounds that it says they are exempt from disclosure for the reasons